Hi everyone, in this video I'm going to answer which is the best dividend stock to buy, AT&T stock, Intel stock, or Ford stock. I'm going to measure these three companies across four different metrics, starting with the dividend yield. So let's get right into it. AT&T's dividend yield was a robust 5.79% most recently. Intel at 5.1% and Ford at a respectable 4.27%. So AT&T offering the highest yield, but that's not the only thing we're going to look at. The next thing I wanted to look at is the earnings per share in the last 12 months and looking at what their dividend per share was in the trailing 12 months. So what I want to see is how much of the company's earnings is getting paid out in dividends. Now, a dividend that takes a significantly higher percentage of earnings is not sustainable because the companies need to retain some of their earnings to reinvest in the business. So this is what I'm measuring here. This is what I'm looking at. So follow along. Let's see here. AT&T in the trailing 12 months paid a dividend per share of $1.11 and had normalized diluted earnings per share of $2.44. So less than 50% of its earnings paid out in dividends. That's sustainable, no risks there, nothing to be concerned about there. The next one, Intel. Its dividend per share in the trailing 12 months was $1.46. Its normalized diluted EPS was only $1.028. This is concerning. So in the trailing 12 months, Intel paid more in dividends than it brought in profits. That's concerning. That is not sustainable. Now, I know Intel is experiencing a significant cyclical downturn right now because of the elevated inventory in the system and the benefit it experienced during the earlier stages of the pandemic, and now consumers are not spending money on computers and laptops and electronics as much, and they're going out more often, and that's a headwind for Intel over the next few quarters. Longer run, I think they should be okay. I think their earnings per share should go back up to prior levels, and I think that they will experience a significant boom in somewhere around the year 2025 or 2026. That's because typically folks upgrade their computers every 4 to 6 years. So that means the people that bought all the computers that were bought during 2020 and 2021, which was a lot more than usual, those are going to need to start being replaced around 2025, 2026, and 2027. So as that replacement cycle comes to play around those times, Intel's earnings per share will rebound considerably. That's my opinion. And so, but for now, it's going to be a headwind because those folks that bought computers are not going to buy other computers this year, right? Because they just bought one in 2020 or 2021. We're not going to upgrade our computers every 2 or 3 years. They're much longer lasting than that. Finally, Ford, in its trailing 12 months, delivered earnings per share of $1.02 and paid out dividends per share of just 50 cents. So less than 50% dividend payout ratio for Ford. Again, I don't see considerable risk here for Ford's earnings per share and dividend per share. Although longer term, out of these three companies, Ford, in my opinion, has the riskiest dividend because Ford's business is so capital intensive. It costs so much money to build out these cars and make these sales. What if they build out a certain model that is not in demand in the market and those flop and they need to reduce the sales price to sell these? And so it's a really capital intensive business, and out of these three it's the most capital intensive, and I would say that it's the out of these three has the riskiest dividend. Finally, I wanted to look at revenue growth, and starting with AT&T, relative flat-ish revenue growth for the most time with small booms, and these coincide with a release of a new cycle. Like in 2016, there was the upgraded iPhone that created a lot of buzz, a lot of interest, and then around 2019, 2020, again another upgrade cycle, and now it's experiencing a sort of the 40% near decrease in revenue. 2022 is a little misleading because it divested away from its direct TV business. Overall, longer term, investors can expect flat-ish to small single-digit revenue growth from AT&T. It's in a mature industry. It's not going to grow double digits. It's going to be, flat-ish, and that's what investors can hope for from AT&T. Intel, like I mentioned earlier, negative 31.6% revenue in its most recent quarter. That's due to the elevated inventory levels, the elevated consumer, the elevated amount of sales consumers experienced during 2020 and 2021. This is going to be a headwind for the near term for Intel. And then Ford is experiencing a boom, 16.78% revenue growth, as the car industry supply shortages of semiconductors has allowed car manufacturers and dealerships, everyone really, to benefit and sell these cars at higher prices and make more of the higher priced models instead of the lower priced models, choosing to manufacture the models that have the highest margins and the highest sales price. These have all been good news for Ford. This is not going to be long lasting. Longer term, you can expect, again, mid-single digits growth from Ford here. So finally, let's look at valuation, and I chose to use the forward PE ratio. And looking at this metric, AT&T is trading at a forward PE of 7.661, which is less than nearly half the price of Intel at 15.28, and the cheapest out of these three stocks is Ford at 7.278. So to answer the question, which one of these stocks is the best dividend stocks to buy, I would say AT&T is the best dividend stock to buy, incorporating everything that I'm looking at here and my research throughout following these stocks. There's a lot that I know about these stocks that I didn't mention in these videos, in this video, because that would make for a much longer video. But looking at all metrics that I can incorporate and what we've saw in this video, AT&T is the best one for dividend stock investors right now. All right, as always, I truly appreciate your viewership. Thank you for watching, and I really hope I'll see you next time for another video. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.